Bitcoin is crashing and the entire market is reeling. But what's really causing this massive plunge? Is it just another volatile day in the world of crypto, or is there something bigger at play? From US government's tariff and global economic strategies to technical indicators and market sentiment, there's a lot happening behind the scenes. And by the end of this video, you'll know exactly why Bitcoin is falling and what it means for the future. So stay with me because you need to hear this. The United States government has been aggressively implementing tariffs on major economies, China, Europe, India, everyone, causing disruptions across global markets. But here's the twist. These tariffs aren't just trade disputes. They're a part of a bigger strategy to manipulate capital flows by US. By causing uncertainty in the fear of markets, the US government is intentionally triggering a sell-off. Why a sell-off, you ask? Because when investors pull out of risky assets like stocks, especially cryptocurrencies like Bitcoin, Ethereum, they look for safer havens. And that's exactly what the US government wants. Here's the real game, bonds. The US government is set to refinance a massive portion of its debt over the coming months. And to do that, they need lower interest rates to make borrowing cheaper. So how do you bring down interest rates, you may ask? You drive up the demand for bonds. By causing fear in the equity markets, investors are pushing towards bonds, increasing demand and thereby reducing yield. Lower yields mean cheaper borrowing for the government. According to the estimates, a US is looking to refinance over 9.2 trillion worth of debt in 2025. Reducing borrowings cost by even a single percent point could save the government hundreds of billions of dollars. This isn't a conspiracy theory, it's a strategic, well-planned maneuver. And Bitcoin, along with other cryptocurrencies, is just caught in the crossfire. The global tariff war is also important. The tariff strategy has also triggered a global economic panic. Major economies like Europe, China, and India are now retaliating with other own tariffs or making strategic moves to protect their markets. This escalating tariff war is creating a ripple effect. Investors are pulling out of risky assets like Bitcoin, Ethereum, and all other cryptocurrencies faster than ever. The fear of a full-scale global trade war is making markets extremely volatile. And when traditional markets fall, the crypto markets, because they're riskier, fall even harder. Coming to the technical analysis, let's look at what is happening there. Through October, November, and December, Bitcoin has reached an all-time high of $110,000. But here's what people have missed. The MACD divergence had inverted on a weekly basis somewhere in December. For those unfamiliar, the MACD is a critical indicator of momentum and trend direction. When the MACD diverges negatively on a weekly basis after such a massive run-up, it's a clear sign of a trend reversal. And that's exactly what happened. Bitcoin's incredible rally hit a ceiling, and the technical indicators signaled a correction was inevitable. On top of that, the broader equity markets have been falling due to the tariff-induced panic, amplifying the decline in riskier assets like cryptocurrencies. Investors are continually liquidating their positions, and they're trying to cover their losses in traditional markets or simply moving towards safer assets like bond and gold because of its recent run-up. Negative sentiment is spreading across the crypto market. With major economies reacting to US tariffs and traditional markets tanking, investors are pulling their money out of their riskier assets, and guess what? That's Bitcoin and Ethereum. But here's the thing. Bitcoin has been here before. Major corrections are part of its life cycle. Whether it's the 2013 crash, the 2017 bubble, or the 2021 correction, Bitcoin has always bounced back stronger. Not to mention that this is a manipulated downturn, and so this may not sustain for a long period of time once the borrowings have been refinanced. The current crash isn't about tariffs and market manipulation. It's a convergence of technical indicators, economic strategies, and psychological reactions. And while the current scenario looks bleak, it's also presenting many opportunities. Those who understand the bigger picture will be able to navigate through the storm. So, why is Bitcoin failing, you may ask? It's a combination of US economic strategy, the global tariff tensions, technical market indicators, and psychological panic. But here's the good news: markets eventually stabilize. For those who can see beyond this panic and this opportunity, those will be able to actually seize those opportunities. So, stay informed, stay rational, be patient, and most importantly, diversify. This is Ruskin Felix. Follow us for more deep dives and share this video with someone who needs to understand what's really happening with the economy and the market.